Hello traders at CMC Markets. This is Trevor Neil of RRG Research. This update is for the 16th of January 2024. Today we're going to look at stock indices and Brent crude oil and gold. Starting with the stock indices. This is a daily relative rotation graph of major stock indices versus the MSCI World. Furthest on the right is our friend, our favorite, the Dow Jones Industrial Average, looking good also, although still in the improving quadrant, but moving in a good direction is the S&P. Nasdaq still stalling. It's in this unfamiliar territory of the lagging quadrant and not really looking so good now compared to the S&P and the Dow. FTSE aborted the improving movement and is heading now southwesterly back towards the lagging quadrant. DAX, long way from the leading quadrant of course, but moving in the right direction, improving, not as good as it was in my opinion, but still looking generally good. This is the hourly chart of the DAX, which has deteriorated considerably after having the second attempt at this high just below the 17,000 level. We've now got lower highs patterns set in. We just this morning on the opening with a gap broken down through this important low of 16,500, moving towards crucial low of 16,400. And if that gives way, then we're moving into this area here where we moved up very rapidly, the best days of this bull market here, back into that zone. We moved up rapidly. This means that we can move down rapidly. There isn't much support on that journey. So this is a pretty dire situation, and particularly so if this 16,400 level gives way. The MACD is going down, as you can see, and the gap is widening there, and the RSI is plummeting. So I think it could go a lot lower, provided it makes that break. However, is a support point. So if it during the morning starts to hold here and we start to get some white candles, then I think we could bounce, and then the idea of breaking the 17,000 high is back on the table. But I think it's difficult now with so much resistance. Really, since the 11th, we've been churning around, and really there's too much overhead supply in the market. Now the FTSE has moved from this sort of neutral position of just holding to breaking down now and looking very dire. It's got a lot of overhead resistance from the 18th, churning around between 7,500 and up to 7,750 up in here, churning around, putting in a lot of overhead resistance, testing this low as I speak at 7,550 and looking weak, it's got to be said. Lower highs, lower lows, MACD negative, gap widening at this moment, RSI pushing down hard. As far as where we're headed, I think it could be down as here to the support, which is not strong, at 7,395. The Nasdaq is feeling the pressure from the high at 16,960, and then these two highs in here, minor highs in here at 16,800. It's got close support at 16,700 and then at 16,620. It's ranging. You can see here the RSI is mid-range, a little bit of lower highs and higher lows in there, so quite a neutral message from that, and very much a neutral message from the MACD. I think from a trading perspective, unless we break out through this high here at 16,960 or through this low here at 16,620, then I think we're range bound, and this is not really providing great setups for and opportunities. So in the short term, the Nasdaq is just not looking that attractive. Now the S&P is slightly better looking position here. We've got clear resistance at the 4,000 4,790 level, spiking up to 4,000, just above 4,800, 4,805. But we've got a higher lows pattern in here, so it's pushing ascending triangle shape. It's neutral at the moment, but if we make that break, then I think it's bullish. And the good thing is that it's a good setup, because if it breaks here, then we've got aggressive stop we can place here at 4,765, and a more conservative stop down here at 4,735, and then there's good support there. So I think there is actually a really good setup here, but we need to move up a little bit to make the break. If we move down and through that line, we're moving into a broad area of consolidation where it's would be likely to churn up around for a while. But at the moment, it looks like it's building up towards having a break to the upside. Now, this is my favorite of the stock indices, which is the Dow, furthest to the right on the RRG chart. We're bumping along at this resistance level here at 37,850. We've got support at 37,260, and then a more conservative support stop loss level at 37,050. Yes, the MACD is coming down, but that is, I think, actually a return to zero type move, not a bearish signal. I don't think it's bearish. I think it's a neutral signal. The RSI is neutral too. It's almost exactly at 50, and it's broken the downtrend line of lower highs, but it's moving sideways. So it's moving sideways, but still we've got a pattern of higher lows. Every time the bears sell, the bulls come in at a higher level. This is looking quite as though it really wants to go up. Gold, which has been pretty disappointing of late, after the sort of attempt at the 2000 level and technical break, but then return move. Now it's looking increasingly as though we're putting in an intermediate term top. Here it's come down pretty hard. It's now testing the support of the high here on the 11th at 2042, and if that breaks, I think we're possibly on our way back all the way down to the first support is at 2013, then 2000 itself. If we break through this level here, which we're testing right now, then there's an aggressive stop loss level would be here at 2055. The MACD is very negative with the gap widening here. Increasing momentum on the downside is the message here, and the RSI is looking bad too. So I think we got this hesitation is becoming more of a significant top for gold, and postponing the proper move through and follow through after in the 2000 somethings to some time ahead in the future. I think it's now going to move down before it moves up, unless it holds precisely here. But given the downside momentum, it looks most likely to break down. WTI is in a big longer term narrowing triangle, symmetrical triangle, and symmetrical triangles are notoriously difficult to pick the direction of the breakout. We're in this tight trading range, which is at the top end is at 73.10, and at the bottom end and then down here 71.22 is the low, but that's the range at the moment. The MACD, you'll see it looks bullish, but no, it's at zero. It's because we're moving sideways. A double smoothed moving average at the difference being at zero is the description of moving sideways, and the RSI is also in mid-range here too, a little bit bullish on this particular candle, but nothing. We've got a defined range. If it breaks out, we could have some power in it, and on the upside we could easily surge actually up to about 70, 75 really quickly, and it is a big triangle, so that could release a lot of long-term energy as well. So watch out, this is getting ready to make a break, and it will happen soon, and it looks most likely to be to the upside. Then there could be quite a quick $2 on the upside. I thank you very much for joining us today. This has been Trevor Neil presenting to you from London. Wish you the best, and may the trend be with you. Goodbye.